Thank you, everyone. Our next presenter is OPT, Ocean Power Technologies. And with us today, we have Philip Stratman, Chief Executive Officer of OPT, and it trades on the NYSE American Exchange under the symbol OPTT. And I'll hand it over to you.
Thank you, Sean. Morning, all. Intro, OPTT. We go by OPT generally. I'm Philip Stratman. I'm the CEO and President of OPT. We are headquartered just across the river in New Jersey. We have a robotics facility over in Cisco, and our primary business is ocean intelligence gathering, primarily in the defense and security space, and we utilize renewable energy that we have, primarily using wave power generation, coupled with some wind and solar that we deploy on our asset, and then we use electric powered autonomous vehicles, so autonomous surface vehicles, but electric boats. So think about it as drones. Drones for the ocean is probably the best way to go and look at them. Used in a wide variety of applications, primarily for data gathering, be that hydrographic surveys, be that support for offshore wind companies around survey work, around mammal tracking, work for NOAA, and also used for efforts around unexploded ordnance disposal, mine clearance measures, and other work that we've been doing. Overall, we're about 70-ish employees across the company, all based in the United States, hold several patents that help us safeguard and build the moat around the technologies to kind of help us with that kind of first mover advantage that we have developed. And as Sean said, listed on the New York Stock Exchange American under OPTT. Speaking, already mentioned it, 3 core groups of products and services that we take to market. It is the power buoy systems that we have. The system that you can see here, that is the current generation wave power system. Essentially, the way it works, it sits out in the ocean as the waves move past. The float collar that sits around it, think about it like a life ring, moves up and down. That drives the generator, and then we've got up to 150 kilowatt hours of battery storage inside the system, which we constantly trickle charge, and we use that to power all sorts of payloads. Benefits of that, obviously, is we have, there's no need to refill it. We have no carbon emissions. We don't have any noticeable heat signatures. We don't have any noticeable noise signatures. So it allows you to hide in plain sight. Works really well for offshore wind developers and defense industry. On the right-hand side, that is one of the vehicles. That's actually the 22-footers that we've got out in Bahrain working for the US. We have those vehicles in 3 sizes, 8-foot, 16-foot, and a 22-foot. The 8 and the 16 are primarily electric charged, powered. The 22-footer can be electric powered, but in tends to be gas powered, and higher burst speeds. Again, both of those combined work then what we have our core offering, which is generally why our customers talk to us when it's helping build our recurring revenue. The maritime domain awareness and ocean intelligence space. So it is using autonomous, resident, persistent systems that are out in the ocean in places where you otherwise cannot collect data, to collect that data, do some edge computing, synthesize it, and then pass it back. What that allows us to do is move into models where we're not selling a product, we are providing the service, so we can provide data that we've collected to multiple customers over, and we can work on those installations on kind of monthly recurring revenue basis, which really helps us with forecasting as we're stepping further into this solution. Broadly speaking, as I just mentioned, our business model is really focused on data and broader monitoring of ocean areas. We look at this roughly under 2 broad categories, being data as a service, although it's primarily synthesized data, so you're looking more of as intelligence, and power as a service. Power as a service is really when we're providing the systems, and sensor agnostic. So we're not going out there with our sensor suite to collect the data to then sell the data. It's rather a case of where somebody says, hey, I need this data to be collected. And we are providing the power or the robotics as a service. So we'll provide them with the buoy, we'll install it, charge them a monthly operating fee. Similarly speaking, for a lot of deployments that we've got on the vehicles, they may not want to own the asset, but rather we will provide them with the vehicle. We will provide operators that we've got in the company, and we'll go out there, we'll install and integrate the sensors for them. We will then go out and operate the vehicle for them. We'll help them collect the data and we hand it over to them. So if we move on to the next job, but again, it gives us the ability to monetize our lease fleet, which is another effort that we've been working on over the course of the last 12 to 18 months. And that is building out a fleet of assets that we have in inventory so that we can quickly respond to a customer, provide it to them for 2 months, get it back, refurb it, and then go and get it out to the next customer. So it becomes a regenerating kind of free cash flow system over and over again. Market-wise, we're broadly speaking in sort of 5 market categories, but the bulk of it sits in the front end that you can see here. It really sits in the defense and security space. That is almost exclusively US defense and security with some exposure to some of our NATO allies. That extent, I think the company, we're now at over 20% veterans, particularly on the operational side of the workforce, which really helps us deliver that service, get on base, and provide the services that are being asked for by the prime contractors or by the ultimate government agency. Power as a service side, again, on the security side, think about applications such as us providing a buoy with a surveillance system that you can deploy at a water border so you can monitor who's coming across. So it's extensions of work that Homeland Security and CBP are doing, for example, so that you can go and monitor ingress out of contested areas. And long-term deployments, but with recurring revenue streams because we're maintaining and operating the systems for the customer. Offshore oil and gas is still an area that we're involved in, primarily on survey work. As oil and gas is attempting to decarbonize some of its operations, we are providing electric vehicles which allow you to go and then use a smaller survey vessel to go out there, which requires a smaller contingent. So it lowers their operating costs to do survey work on existing assets or on new drilling fields, leases where they're looking at, but do so in a manner that also reduces their carbon emissions. Power as a service falls into that same area. We did a project a couple of years ago with Premier Oil, which is now Harbour Energy in the North Sea, where we replaced a guard vessel around a decommissioning oil field, used a power buoy instead, and it materially helped lower their costs and their carbon footprint as they were waiting for a vessel of opportunity to do the abandonment of the wells. Science side, I mentioned earlier, we do some work with NOAA. We also work with various research institutions to help them provide lower cost robotic assets so they can do much more with the limited budgets they have, and enables us to start displacing some of the incumbent technologies. And that is a kind of a nice recurring revenue base because those are usually annual programs that roll forward. Offshore wind is another one where we are getting more and more involved in. Again, on the offshore wind side, it is primarily around monitoring of their lease areas pre-construction and then during construction. So we can provide zero carbon vessel traffic management systems using the buoys. We can do mammal tracking. We can do pre-construction surveys. We are a member of the Offshore Wind Innovation Hub here in New York City over in Brooklyn, which is hosted by Equinor. So it's part of that kind of broader East Coast ecosystem of trying to use robotics and bring that into the field of offshore wind developments. On the communication side, we've been public about the fact that we've been working with AT&T to work on 5G at sea prototyping and using our buoys to start deploying comms nodes out in the ocean so you can get those heavy data loads that are being generated by drones and detection systems and get them more effectively back into the cloud, particularly when it comes to defense and comms channels. So why now? OPT has been around for quite a while. I was appointed CEO 2.5 years ago, and in that time frame, we have materially turned over the company. We've changed over the entire management team. We've most recently announced the fact that we have cycled down almost most of our R&D activities because we've now got fully proven out commercialized systems that are available for our customers to use for the services that we've got. We've reconfigured the team to go after the defense and security space. We recently announced the award of 3 IDIQs from NOAA, so essentially government master service agreements, which have a combined ceiling of $21.5 million, I believe. And we are working on several. That's really helped us position the company from where it used to be to where it is going now, which is, moving into utilizing the underlying assets that we have to collect the data and intelligence that the customers are asking for and provide that to them at a much lower cost point than they would need to pay if they went the traditional route. Here, the revenue growth has been achieved under the new management team. It's been a steady track. Actually, we've got our earnings call next week, Thursday, for our second quarter fiscal year 2024 results. So our fiscal year runs May 1 to end April. So that will be what you can see here is that since revamping, transitioning across and over, we've started to grow the revenue to a more stable base, and that gives us the ability to sort of work on our forecasting, build up the company, reorient it to where it needs to be, and execute on the strategy that we've put in place. Backlog shows that we've building the opportunities that we require to go and get the revenues grow to the point where we can be cash flow positive over. We do have a forecast on positive cash flow. We put out a press release, it's either 2 or 3 weeks ago, on some further optimizations we did within the company. We optimized the headcount to reduce our quarterly burn, so that will start getting reflected in the current quarter and going forward. What that has enabled us to do is really retool the organization. In addition to the management changes we did and the focus on have more than 50% of our headcount focused on operations and delivery. As I explained, that is where the driver of our revenues sit, because that is the recurring revenue base when it comes to solutions that we're putting out for our customer base. Our pipeline, and this is a snapshot of the pipeline as it was, I believe, on our fiscal year, and you can see here it includes a healthy mix of just buoys, just vehicles, and then vehicles and buoys combined. And on the vehicle and buoys combined, what is important to note is we recently demonstrated the ability to remotely dock and charge one of our vehicles. So what you're seeing, with superchargers that you see across the highway network in the United States, next generation of these systems, what you'll be able to do is deploy forward-based charging stations and data exfil stations. So you can have the vehicles out there collecting data. They come alongside the buoy, they charge themselves up. Whilst they're charging, they're uploading the data to the buoy, which got a bigger processing power, and they're using the comms hub that you have on there to put it into the cloud. That materially does, it really starts moving the operator out of the field and puts it sort of, wherever you have a cozy cabin that they can sit in, rather than having to go and sit them on a boat. Pipeline, as it stands for the fiscal year in terms of overall opportunities, sits at about $8-ish million. Obviously fluctuates on an ongoing basis. But what gives us great comfort is the fact that a lot of that is customers that are under NDA, or customers that are actually reviewing our proposals, or customers even more so that are in active negotiations on various efforts that we got underway. Quite often see a lot of our press releases going out, and it's unnamed US agencies or unnamed prime contractors, and that's partially to do with the fact that a ton of this sits in the defense and security space. Value proposition for our customers and for our shareholders, we think is very clear. We decrease and or eliminate certain costs for our customers. Well, that means they can go and more effectively allocate what in oftentimes OPEX expenditures, which are much easier to make than having to purchase assets. Particularly in the rapidly evolving technology world, they don't want to own the assets because by the time they have trained their operators on how to use them, you're onto the next generation of systems. Us providing the assets for operations for them allows them to shift expenditure from capex to opex and use of opex much more expeditious way. Materially improves their safety. Every time you remove somebody from operating out in the ocean, that is a time. So personally, from my background, I spent some time in the Navy and then working offshore oil and gas. So every time you can go and remove an operator out of that loop, it is a good thing because that reduces insurance costs and everything in between. Much more rapid decision-making speed for our customers. What has happened on the onshore world in oil and gas and energy and the defense and security with automation and drones and everything in between is only just starting to come in the ocean. So this really starts getting them into real-time decision-making, which they haven't been able to do. And it materially enhances their sustainability efforts. Every time we put out a vehicle or a buoy, that is a boat that's not going out, that's not burning bunker fuel. They get to claim the carbon credits from it, they get to go and claim the lower emissions from it, and it decreases their costs. Win-win for them. And what it enables us to do is to go and build that recurring revenue base that our shareholders get excited about, because that helps start introducing some certainty around where things are heading, how you scale it up, what are repeat customers, and it gets us into that customer intimacy so we can start. On the leadership side, so you got myself as CEO, you got Bob Powers, who's here in the audience, he's my CFO, and you got Matt Bedini, who's my chief commercial officer. Between us, lots of experience in private equity, public markets, and particularly in the maritime, defense, and oil and gas space. Matt was with us marketing for 15 months. Recently appointed him as chief commercial officer as part of the realignment that we did to focus the management team and to focus the company on really driving forward what needs to be done for customers and building that pipeline up that gets us that certainty. Investment highlights again here. These are the bookings forecasts that I mentioned. This is, you can see since we took over as management, we did a close to 4x on bookings in our last fiscal year. We're forecast we put out for this year, which I think gets us to just over $15 million worth of bookings. Extrapolating from that, obviously, bookings then translates into backlog, which then translates into revenue generation that we can go and deliver on. We have a clear strategy. We have a first mover advantage, particularly as it comes to data and power as a service out in the ocean. We've put out our path to profitability and free cash flow over the next 6 quarters on our side. That gets us to 17, 18 months from today. And we have an experienced management team. Bob, Matt, and I, members of our board, and then the team that we've on the operational side and on the engineering side. Overall, that clear focus on defense and security, given global developments, it is certainly, and we are seeing a material increase in interest for more rapidly deploying autonomous assets into big Navy. We've seen that through public about this, the work we've done with Fifth Fleet in Bahrain as part of Task Force 59. And that is kind of the US Navy's autonomous and artificial intelligence task force to try and integrate and operationalize autonomous vehicles, autonomous systems, and ocean intelligence gathering into operational force projection. So that's something that we're pretty excited about participating in. Strategy we set out is working. Since the end of our last quarter, we announced the 3 NOAA IDIQs that I mentioned. We demonstrated the charging of vehicles remotely using our buoys. So you can use renewable power to then charge up an electric ocean drone to then do more operations. So to further the footprint, carbon footprints, and extend, data gathering operations and intelligence processing operations that you're conducting out there. Just to conclude, as I said, balanced management team, a seasoned management team. We have a very strong balance sheet. We have cash in hand to execute on the path to profitability that we laid out, and we've expanded the business model and strategy, and really are focusing on defense security, recurring revenues, and providing data gathering and ocean power as a service. That, let me turn it over to questions.
Any questions from the audience? All right.
Thanks, Philip. The company's undergone quite a transformation, let's say, over the last few years. Might make sense to talk a little bit about what has happened, because the company and the technology has been around for a while in terms of the buoys themselves, right? And maybe investors that are familiar with the company, but it's become a very different company in the last couple of years. And I think discussing that transition and then what's led to, obviously, to backlog, right? And pipelines and being able to see real revenue starting to come in, maybe address that and then talk about the commercialization inflection point. I think that's really what it comes down to is, it's what's happening. That's creating the revenue.
Yeah, absolutely. Thank you, Sean. What the company did in the past was research and development of wave power systems. Originally for grid-connected work. I think that's going back a decade plus ago. Then it changed its focus from going, okay, we're not going to do grid-connected wave power. We're going to do non-grid connected wave power. That helped prove out the technology that is being used on the current generation of the wave power systems. And then what we did when we came in, changed the management team over. Most of us came from, as I said, either defense or oil and gas space. So we were very used to a certain way of operating with suppliers such as OPT. So what we ended up doing is we pivoted the company to okay, we're not going to sell our products and service solutions directly to the customer, because then you need to train them up. Then they need to go and operate it, and you don't really know how they're using it. And by shifting from CapEx to OpEx on their expenditure, that's helped us get that backlog built up, because it materially reduces the barrier to entry for them to participate when it comes to new technologies. The other thing we did is we built out our own small technology integration and software development team, so that we can actually have one standardized surveillance solution that we can deploy on our systems, including on the vehicles. Because what that enables us to do is now we were able to remove the conversation to even focus on buoys in vehicles. Survey work, or you want to do surveillance work, here's how we do this for you. And yes, we're going to use autonomous vehicles or we're going to use buoys to do that work, but you don't need to worry how they work, because we have demonstrated over several years of runtime that they operate well. And again, all of that helps us move from R&D to proving out the technology to what is now what I would consider to be operationalizing it. I think we're at that cusp between commercialization and operationalizing it. And I think that is shifting the focus. And that last effort that we publicly announced by shifting the headcount that we had and really making the majority of the company focused on operations, I think that is sort of that that last bit that gets us edging along.
Philip, we have a question from our online audience. What is the outlook for GM, and what is the expected GM at scale?
As you've seen from the last quarter release that we had, our gross profit margin tends to sit at the 50-ish% mark. We see that at around that level, marginally improving, mainly as we're shifting towards that increased service model. Because the more we can go and push out robotics as a service and data as a service, it enables us to put the operators, our salaried headcount, and put them out over and over again. So same as the vehicles and assets, once the fleet is built up, all of those pay for them multiple times over. So if you're looking at our quarterlies, that's a good indication, plus some marginal improvements on where things are.